Hi again. Today we're going to talk about what is a financing contingency in a real estate transaction and how does it affect you if you are a buyer or if you're a seller. My name is Karen Jackson. I'm a real estate broker with John L. Scott in Renton, Washington and the surrounding areas. Thank you so much for watching. So what is a financing contingency? A financing contingency conditions the sale of a home on the buyer obtaining a loan. If the buyer is unable to obtain a loan, the contract terminates. If the buyer terminates and has complied with the contingency terms, the buyer would be entitled to a return of their earnest money. Unless the buyer is paying with cash, the majority of purchase and sale contracts include a financing contingency. Now, there may be circumstances where the buyer does not include one, maybe because they have multiple offers and they want to make sure their offer is stronger, or maybe because the buyer's financing is already approved and they are very certain they will not have a problem getting a loan. If a buyer does not include this contingency and they cannot close because the loan is not approved, the buyer would forfeit their earnest money. Also, if the contingency is not included, they will not have the protection of the appraisal contingency unless they add in a separate appraisal contingency addendum. The financing contingency specifies that a purchase is contingent upon a certain type of loan, which must be specified in the contract. The most common type of loans are conventional or FHA. How much the buyer will be putting down and when they are required to make application for the loan must also be specified. If a buyer fails to make application by the due date or changes loan types or lenders without the consent of the seller, the financing contingency is automatically waived. So it is very important for a buyer to be pre-approved and know this information, and for the buyer's agent to fill this out correctly. There also is verbiage included giving the listing agent the right to speak with the buyer's lender and a process for that, as well as a right to terminate clause and a process for that after a specified time frame. This is a protection for the seller, so they are not keeping their home tied up and off the market for a buyer whose loan is failing. This form is also used if the buyer is asking for closing costs to be paid by the seller, and it also has an appraisal contingency built into the contingency. I will go over the appraisal contingency in my next upcoming video, so be sure to watch it. If you are a seller, in order to have the most assurance of a sale, you will want to make sure you have tight timelines for the loan application, the request for loan information, and the right to terminate notice. You will want to make sure the buyer is pre-approved or approved for the loan type they are stating in their contingency and that they have the funds to close. The financing contingency is a very important contingency for both the buyer and the seller, and it can be a bit confusing. If you have any questions regarding this or any other real estate questions, please comment below. I will be happy to get right back to you. If you're thinking about selling a home or buying a home, please fill out the form below. You can find the link in the comments and I will show you the next steps. Thank you so much for watching. Please be sure to like my video and share it with your friends, and don't forget to subscribe. I will see you next time.